Well, China really seems to dominate people's investment horizon nowadays, especially given our reliance on the country's growth to drive our mining sector. So it's a little concerning that the old warnings of a hard landing in China seem to be returning. At the same time, there are a growing number of foreign securities that are being enthusiastically pumped our way. Think about a Chinese equity ETF right now, for example. Well, Steve Johnson from Forager Funds is back in the country after a big overseas trip, and he joins me now. Steve, there is this rising talk about a possible hard landing in China. What do you make of it?
My view on the Chinese economic situation hasn't really changed. And that is not that you're likely to see a crash, because you have a centrally controlled economy over there where the government has the ability to do a lot about it. I think what is much more likely is a Japanese-style lost decade, potentially lost 2 decades, as all of this bad debt works its way through the system. And that's the issue here, is all this infrastructure that's been built over the last 5 years that's been propping up the economy has been funded with debt, and that debt is never going to get repaid. In a US-style system, you would write it all off, it would be a disaster, there's a massive crash, and then the economy goes on growing again. In a very carefully managed economy like this, that's not going to happen, but it still retards your economic growth for a very long period of time.
Yes, because we've been talking in the last few days very much about the equity markets and the fact that there might be a bubble there. Even if there is a collapse, as Anne was mentioning just there, even if there is a collapse, would that matter?
I mean, it obviously matters, but you need to remember that the stock market in China is a much, much smaller percentage of the economy than it is in Australia or in the US or a place like that. And there's a lot less individual leverage that's put into it at an investor level. So you'll see a crash over there, and particularly in parts of the market. They've got a dot-com bubble going on that's as big as the dot-com bubble that was in the US back in the early 2000s. So that will crash. But I think you also have a bunch of large insurance companies, for example, and big businesses in China that don't look stupidly priced to me either. So in terms of the large market cap stocks, it's nowhere near as stupid as it is at the small end of the market. So you'll see a crash. I don't think that in itself will bring the economy unstuck in a huge way.
And what sort of impact is all this going to have on Australia?
Look, my concern in Australia is that everyone is now aware that commodity prices are in a funk, and that's going to be there for a long time. And in fact, we are finding lots of bargains on the stock market in that space. We still have bank shares trading at very high prices, although they've pulled back a lot over the past month or so. We still have consumer discretionary stocks. We still have property prices in Australia that are very, very high. I don't know how all of this plays out, but it worries me that we have a very leveraged economy at a time where China is slowing down and we are so dependent on that economy. So my concern is now not so much commodities, because that has already been factored into stock prices in a very big way. My concern is what are the second and third order impacts on the economy.
All right, and on the opportunity front, you're looking at mining services companies. They've bottomed out, have they?
Believe it or not. Look, we've been very, very negative about this space for a long time. We're getting very interested. You mentioned I was overseas. I had lunch in London with a couple of fellow fund managers last week, and the area of the world that they are most interested in is some very, very distressed mining services players in Australia. We have businesses here now that you can buy the whole company for 20% of the value of its equipment sitting on the balance sheet. Now, it's a difficult environment, and that environment is not going to get better, but the stock prices that we're seeing are more than compensating for the difficult environment. Most investors look for a rosy scenario before they'll invest in something. The way to make money in the stock market is actually to look for completely the opposite. Look for the places where people are most pessimistic. And for us at the moment, that's mining and mining services.
Now, the other area of opportunity, although it might be a fair way off, you've been looking at India.
Yeah, we haven't invested any money there yet, but I do think in terms of the economy and in terms of demand for Australia's resources, there's a hope out there that India becomes the new China over the next 20 or 30 years. And I think we've seen in the first 12 months or so of the new Prime Minister Narendra Modi over there, we've seen some signs that that economy is starting to take some steps in the right direction, that it is starting to try and fix some of the infrastructure problems that have been holding back its growth. Now, infrastructure, as we've seen in China, is very commodities dependent. So I think it's a part of the world that is a hope for Australia's resources sector in terms of plugging that demand that's going to slow significantly out of China.
Steve Johnson, thank you very much for joining me.
Thanks, Tiggy.